So here we will look at this expenditure cycle or procurement cycle, right? So the idea is, so yeah, last time we talked about, okay, so you have inventory and you sell inventory, right? But in order to sell inventory, you need what? So in order to sell inventory, what do you need to do? You have to have inventory, right? So there is another cycle, this kind of what's it also called purchase or expenditure procurement cycle, right? Which deals with basically acquiring inventory. So today we'll talk about this. So again, very similar to the last lecture, but today we just concentrate on this other cycle. Okay, so we'll also look at ER diagram, we'll look at DFDs, forms and so on, and again I would like to analyze ER diagrams more thoroughly. Okay, go slightly beyond the book. So, this thing doesn't work. So let's first look at kind of the model, typical model for your purchasing cycle, right? Well, it's not just purchasing, it's purchasing, payment, and returns, okay? So you go, you buy inventory, you pay for your inventory, and well, sometimes you need to return this inventory, right? If it's defective, for example. Okay, so what? So you have this system, again, which deals with this expenditure cycle. You have inputs, you have outputs. So again, those are informational inputs and informational outputs, right? You don't really see that, you know, inventory comes here, you know, money leaves this, right? So this is about information system. Okay, what kind of information is entered and what kind of information is outputted from a system. So for inputs, well, you have, you know, you cannot just go by inventory, right? You cannot have your purchasing people going by inventory. So there should be a need for that. Okay, so this is called requisitions, right? So first you get a requisition from your employees, and then you go by inventory if needed. Okay. So then, well, usually how it works. So of course you need to find out prices on the inventory, right? So there are many vendors. So you need to find out, well, what vendor will give you the best quotes, right? So you will enter price information, okay? Also, you know, if you do buy inventory, you need invoices, okay? And guys, why do we need invoices? Remind me from your accounting courses. What is an invoice? You can track what? Okay, so based on this, you journalize it, okay? So, but why do we need this? Okay, so this is called a source document, right? So based on source documents, as you said, you journalize them, right? You enter information to your system. So there should always be some kind of source document, either physical or electronic, right? Which we discussed in this course. So this is a source document, good. So then what are the outputs? Okay, so if you want to order something, so you should create purchase order and send it to a vendor. You need to pay a vendor, right? So write checks, for example. Finally, you have debit memos. And why do we have debit memos here, dear accountants? So what is debit memo and why do we need debit memo as an output to this purchasing cycle system? Yes, yes. So if you return goods, right, so you need adjustments. So debit memos are there for adjustments, for returns, basically. Okay, good. So so you have this case, but let's just go straight to what's going on here. So basically you have six, well, you have, I think, four more or less, but in this case, that in the book you have 6 significant business events, okay? Well, first of all, you have to collect quotes from vendors. You need to know the prices, right, for items that you would like to purchase. So first thing is collecting quotes. The second thing is that you have to get requisitions. Before you order something, well, usually you have to get requisitions, right, in most cases. Then you do the actual ordering, so you create a purchase order, you receive the merchandise, you pay for the merchandise. Finally, you may return some merchandise. Okay, so there are six significant business events for this cycle. Okay. So given that we have this events, then we think about, okay, what are the resources? What are the significant business resources? What do you think? Cash. Yeah. So you have to pay. And what else? There must be at least two. Actually, there are two in this case, but at least two. I'm sorry? Inventory. Yes, cash and inventory, right? So you acquire inventory, you pay with your cash. You might try to think of something else, but at this point we'll have two, inventory and cash. Okay, good. So who are the agents? Who are the agents that take part in this business cycle? Sorry? Not sales. Purchasing people, right? So, okay. Vendors, okay. Yes, accounts payable clerk. Who else? Yeah, purchasing manager, for example, for requisitions, yes. And yeah, you will have some return clerk, okay. Yep. And finally, if you order an item, right, items come in, right? So who else do you need? You need warehouse clerks, right? Or receiving clerks, what they call it here. Okay, so you have those agents. So now we have significant resources, events, we have resources, and we have agents, right? Well, then you think, well, how are those related? And this is pretty easy to figure out, right? So if you receive an item, right, so you have receiving clerks, right? If you pay for an item, well, you have clerks that pay, and also you have a resource which is cash, right? And you receive inventory. So for each of those, basically, think what are events associated with, say, agents, and what are resources associated with those events. So you kind of do this REA, I think we discussed before. Let me go straight to ER diagram. So this is ER diagram for expenditure business process, basically for this purchasing process. Okay, so let's take a look. So you have all those six significant business events. You have quotations, right? So so you get quotations from vendors, right? And quotations are for inventory, right? You get requisitions from your, well, let's say call them here departmental employees. The requisitions are for inventory. You create purchase order to buy inventory. Well, not you, but purchasing agents create purchasing orders, right? So receiving clerks receive inventory. Then accounts payable clerks pay in cash to vendors, right? Finally, sometimes you will have to return things. So again, you will return. You will have people. Actually, here it's a purchasing agents, right? But they might be return clerks, right? Who will do this? So you have people that return merchandise to vendors. So you have inventory, you have vendors, okay? So given that we have this kind of idea, who is who, what is what here, how those are connected, let's basically think more about relationships. So when you know that there is a relationship between some items, direct relationship, you have to think about cardinality and optionality, right? What kind of relationship that is. So, just like last time, let's analyze relationships, and first we'll start with relationships between events. Okay, so one event is payment, the other event is receipt of item or of items, right? So to have this event. So what kind of a relationship it is? Between payments and receipt of items. So what kind of relationship it is? So So for each receipt of items, you have either 0 or 1 payment, right? And then for each payment, no, not at least. You have exactly 1 receipt, right? Okay. So let's look at this. Let's first look at this part. This exactly 1 thing, right? And first let's look at this kind of exactly, kind of there must be a receipt. So for each payment, there must be a receipt, right? Okay. So what does it mean? Last time we analyzed similar things, right? So actually we already discussed it, but this is kind of slightly different setting. So you have a payment, and you must, if you pay, you must receive an item. What does it mean? What kind of business rule is that, and does it prohibit or something? Does it not prohibit? So what do you think? Does it make sense? So if you pay, you have to receive an item. Okay, makes sense. All right, well, so what does it prohibit, right? What kind of business practice it prohibits? Guys, what do you think? So okay, so you think about it. So if you pay, you must receive an item, right? So it says, well, basically it prohibits payment without receival of items. Okay, so when do you pay without receival? Talk about this. Yeah, when you pay, but without receival of item, or before, maybe this is a better way to put it. Yes, when you have pre-order or prepayment, right? So here basically says, okay, you pay only when you receive an item, right? It says, if you pay only if you receive an item. For each payment, there must be a receipt of items, okay? So if you want to prepay, you cannot do it here, okay? So this business model does not allow us prepayment. Okay, good. So this was kind of this mandatory side on this. What about the cardinality? What about this one side? For each payment, there must be 1 receipt of items, okay? So what does that mean? And what are restrictions here? No. Yes, but this was mandatory side. Now we're talking about one side. So for each payment, there is 1 receipt, okay? No. Okay. Guys, again, look, so you have a statement. For each payment, there is 1 receipt of item, right? So if you look at kind of contradiction to the statement, it would be for each payment, there cannot be many receipt of items, okay? It can be only 1. So you cannot pay for many receipts of items. What does it mean? Okay, so let's look. Okay, guys, you have to know how to read this. So before we discuss this mandatory side, right? So for each payment, you must have a receipt, okay? Now we take, so now you see that there is no cross foot here. It means 1. So for each payment, there can be no more than 1 receipt, right? No more than 1. So for each payment, you cannot have many receipts. So what does it prohibit? The question. Yeah.
Because we do a payment and it's going to be only a 1 transaction, so we're going to have only 1 receipt because of that.
No.
If you pay the money, like no matter what amount you pay once, like as soon as you paid, they have to give you some receipt. Doesn't matter what amount you give it to them.
No. Yes, exactly. Had to pay for things separately. So suppose, okay, I'm doing business with Dell, right? I'm Rutgers. We need computers, so we order computers for this lab, and we realized, okay, we have many students. We need another lab, so we ordered, a second set of computers, right? So and I as a Rutgers, right? I receive 2 sets of computers. So this does not allow me to pay for them all together. I can't make one payment. I should make a separate payment for one set of computers, and I should make another separate payment for another set of computers, okay? So I can kind of aggregate my payments, okay? So this is what it says. So for each payment, there can be no more than one receipt of items. So I cannot pay for many receipts.
So basically you have to pay in full, right?
What do you mean in full?
Like if you order computer, for example, 10 computers, you have to make a payment to pay all of them, not like partial.
No. You're talking about this side. We're talking still about this side. Again, look. For each payment, there must be exactly one receipt of item, right? So you pay for exactly one receipt of item. So this exactly means basically, well, you know, okay? So you were talking about the other side, yeah. So we'll talk about this in a moment. Again, so basically it prohibits you to pay for many receipts of items, okay? So you can create one big payment for many things, which sometimes is a problem for you. Okay. Now let's look at the other side. Okay. So for a receipt of item, you may or you may not have a payment. Okay. So you may not have a payment, or you may have no more than one payment. Okay. So let's look first at this cardinality side. So for each receipt, you have just one payment. What does it mean? Yes, you cannot, or in other words, you cannot have many payments for each receipt. This is what you said. This you have to pay in full. Yes, you have to pay in full. And again, if those are some very expensive items, that might be a problem, right? So maybe you would like to pay. You can pay in installments. Okay, just as before. Installments are not allowed. So this may be or may not be a problem. So it depends. This side we look kind of. So if you're a company and you're purchasing from a vendor, so most likely you will not pay in installments, right? So this is more important when you have sales cycle, when customers buy from you, okay? And customers may not have enough resources to pay for, say, jewelry, right? For some expensive items. Okay. Guys, so do you have questions? Yeah, so, ask questions, right? Or, raise your hand and discuss this. Okay, what about this optionality here? So for each receipt, for each receipt, there may be no payment. For a receipt, there might be no payment. You receive an items, and, well, there might be no payment. Okay, gifts, advertising, okay. What else? No. So no prepayments, we'll discuss this. Prepayments is this mandatory side here. So you received an item and you didn't pay for it. Is it possible? Yeah, you can pay later, right? So yes, as you said, so you may buy on credit, right? Or even if not credit, well, first you receive an item, so you record the receivable, okay? And then, well, it may take even 5 minutes. You cannot pay instantaneously, so you'll pay later. So first you receive, then you pay. So there is kind of some time lag here, okay? And because of this time lag, you can have you can have a record, okay, we received this item, but you may not have paid it since, there wasn't time for you to pay it, even if you kind of pay immediately, okay? So there is some time lag between some events, and this is why you have this optionality here. Good. So what about those two? Purchase orders and receipt of items. Okay, so what kind of relationship is that? How would you read it? For each
item receipt, there must be exactly one purchase order.
Okay, so for each receipt, you have exactly one purchase order, and then the other way.
That's purchase order.
Yes, so for each purchase order, you may have 0 or 1 receipt of items, okay? Guys, again, think. So let's look at this side, right? So it says here mandatory 1. So mandatory means that, well, for each receipt of items, there must be a purchase order, okay? So for each receipt of items, there must be a purchase order. Does it make sense or not?
For each receipt of item, yeah, that does make sense.
There must be a purchase order. Well, not always.
Oh, yeah.
When this would not make sense? Hmm?
It's a gift.
Gift.
Or if it's like a sales.
Okay, good. Well, would you take gift from vendors? Okay, so supposedly, okay, gift. Okay, I agree. So one thing is when you got it for free, for some reason. But suppose, okay, what other things can be? Suppose you did not get it for free. Can there be a situation when you received an item and, well, you didn't create a purchase order for that item? Actually, we already discussed it last time. I'm sorry? Yeah, but forget about free stuff. So it's not free. I'm sorry? No. Again, so you're a company, right? You did not order something, but you received it. Okay? Is this possible or not? Yes. When? Does it make what shipment?
What if it's like set delivery? So it's like
Okay, this is better. Set delivery. Okay. Yeah. So good example. So you may have, kind of arranged some kind of deliveries beforehand, right? And you don't have to create orders. You don't have to create each time purchase order. Okay, this is one possibility. But what else? We discussed it last time. So there is certain business, okay, where you would receive an items without purchase orders.
Salvation Army.
No. Actually, there are two kinds of businesses where you would, have that. Okay. Yes. And all of you know those types, at least one of them. You should know definitely. No. Okay, so how does a Dell operate? Or Toyota, for that matter? Do you know? Dell or Toyota, just in time. Just in time. Have you heard of that?
Yeah.
So this is an example of just in time. So when you have this, when you have just in time, okay, there is no time to create purchase orders. Usually don't do it. Okay, so you have those assemblies, you have those lines, and you have suppliers or vendors which would automatically give you the materials. Yes.
Wait, but if you're using just-in-time inventory, if I call Dell and say I need this kind of computer, a PC, you have
Right.
to create the purchase order before you start building it, right?
But we're not talking about you as a customer. We're talking
Okay.
about Dell and vendors.
Okay.
Relation between Dell and their vendors. Okay.
Okay.
Or the other thing I told you last time is what? VMI. VMI. Vendor managed inventory. Okay. And I gave you example with Coca-Cola, for example. So sometimes, Coca-Cola, you don't have to order Coca-Cola. So they will do all these things for you. They know the customer demand, they know the population, and so on and so on. So they will refill a stock for you. You don't have to create purchase order. Of course, then you have to pay later. But it's not your problem to think, okay, how many bottles of Coca-Cola I need in my store. So basically this mandatory side here prohibits this just-in-time inventory and VMI, vendor managed inventory. Okay, good. So what about this one side? Okay, so for each receipt, there is one purchase order. In other words, for each receipt, there may not be many purchase orders. For each receipt cannot correspond to many purchase orders. What does that mean? And I gave you example last time.
You have to ship the items.
You have to ship the items. Yes. So essentially, what Adeji is saying, suppose you placed several purchase orders, right? So vendor is not allowed to combine, those items into one shipment, to one delivery. Okay. So they have to ship all things separately, which is, of course, doesn't make sense from the cost perspective. It's very costly, to ship things separately when you can, ship everything in bulk. Okay. Questions? Questions? No? Good. So what about this one? So for each purchase order, you have one receipt of items. Okay. So for each purchase order, you have just only one receipt of items. What is the problem with this one?
Which one?
This one side here. Okay. So for each purchase order, you cannot have many receipts, right? For each purchase order, you have only one receipt of items. What is the item is? Not available. Exactly, right? So you want to buy something from vendor, right? You place an order for 1,000 chips, whatever, and in stock they have only 999 chips. Okay, so they don't have 1,000, so they will not ship. They will have to wait until they will have 1,000 in stock, and then they would ship those. Okay, so they cannot create two shipments. So if you order something and something is not in stock, a part of your order is not in stock, they cannot ship you the second part of order, which is in stock, because only one shipment, only one receipt per purchase order. Okay, so this is not a good idea. Okay, what about this optionality here? So for each purchase order, there might be or there might not be a receipt of item. For a purchase order, there might not be a receipt of items, a receipt. Does it make sense or not? So again, when you think about it like IS, right, about tables. So you have a table, right? You have a record of a purchase order, but you don't have a record of receipt, okay? Is it possible or not? Yes, why? Yeah, exactly, right? So so you created an order, right? But it takes time to ship, to deliver this item, right? So therefore, you may have a record about purchase order, but you may not have a record of receipt. Okay? When you receive, well, then you'll put this into the system. But for each purchase order, there might be a situation where you don't have a receipt information, okay, in place. So this is perfectly fine. And again, this is due to this time lag. There is a time lag. This is very, very important. Keep in mind. Okay, so basically those things are very similar to what we discussed last time. So what is different is kind of this relationship. So you have requisitions, right? And you have purchase order. And again, this is one relationship just as before. So on the one side you have optional one, on the other side you have mandatory one. Okay. So let me quickly. So for each purchase order, there must be exactly one requisition. For each requisition, there may be 0 or 1 purchase order. Okay. And again, let's look at this side from this requisition side. So mandatory one. Let's look at mandatory. So here a purchase order, and for each purchase order, there must be a requisition. Does it make sense?
No, it doesn't make sense.
Why not?
Because, like we discussed before, if you're buying things that are already set up, so you don't necessarily have to request it. It's a time delivery. So every 2 months you receive an item.
Okay, this is one valid point. Okay. But if you don't do that, does it make sense to to have requisitions for purchase orders or not? To require requisitions for purchase order. Well, I think it does, right? So before you order something, well, there should be, so there should be a request for those items, right? Yeah, unless you have this kind of just in time, or unless you have this VMI or whatever. So yeah, in this case, you might not have to. Okay. What about this one? So for each purchase order, there is one requisition. Okay. So for each purchase order, there cannot be many requisitions. What do you think about this one? Why? So for each purchase order, you cannot have many requisitions. Okay. So what? No, this is not about items. This is about requisitions. So basically, it tells you cannot combine requisitions. Okay, is it good or is it bad? And when it's good, but when it's bad. So when you order, right, something, well, you cannot kind of create an order which would combine many requisitions. What do you think? Guys, you're in business, right? You should think what it really means. Again, so you have an order, right? Well, you have requisitions. Suppose you have 10 requisitions. I cannot combine them in one order. And sometimes it doesn't make sense, okay? Sometimes it is costly for you. And when it is costly? What do you think? Shipping, but shipping is not even such a big deal. It's not, maybe without shipping. But this shipping, this is for vendors, right? But for you as a business, right? So, I'm sorry?
Does it affect your sales because of your stock?
No.
You're waiting to be paid.
No. No. Well, let's forget about this for a moment, right? Let's just take this into account. Yeah, I think, yeah, you're correct in a way. Yeah, so you'll have a lot of payments, but let's forget about this. Let's just look at those two entities. Okay, suppose, let me give you an example, again with Dell to make it easier. So suppose I have one requisition for displays. I need 1,000 displays. I have another requisition for 1,000 PCs, okay? Then I have another one for 500 printers, okay? So I have 3 requisitions, one for displays, one for PCs, one for printers. So this rule, this one, tells you, well, I cannot create a purchase order for those 3 requisitions, right? I cannot combine all items together, displays, PCs, and printers together. And why that might be a bad idea? When this combination is, beneficial. For discounts, yes, exactly. So if you buy in bulk, okay, you usually get a discount, okay? So here, you cannot create a combination, and well, your volume will be lower, so you will not get a discount, or you will get a lower discount, okay? So this rule doesn't really make sense, okay? You would want to have many here. You would want to combine many items together, okay, and get a bulk discount, okay? Questions? What about this side? So you have optional 1. So for each requisition, there may be or may not be a purchase order. And let's talk about this one side. So for each requisition, there is one purchase order. In other words, for each requisition, there cannot be many purchase orders. Is it good? Is it bad? What do you think? For each requisition, you cannot have many orders. You should have just one order. Have a requisition, well, create one order. You cannot kind of split items. Is it good or is it bad? purchase orders. You should have one purchase order. You can split your requisition into kind of smaller parts and create separate purchase orders. Is it good or is it bad? What do you think?
I think it's bad. Like, I work at a construction company, so
Mhm.
we need the different purchase orders to then bill it to different jobs. Different jobs we're working on. If it's all combined, then
Okay, so one point as well, it can get messy, right? So it's hard to track. Well, okay. Let's take this into account. But what other regions might be there? Let me give you, a kind of example, which is a goofy example, but I think it will make the point. Suppose you have a requisition for 1,000 displays and 1,000 dozens of flowers. Okay. So this rule tells you, well, you should create one purchase order, right? Okay. So how do you imagine this? Who would you send this order to? To 1800 whatever flowers.com, or would you send it to Dell? Do you see the problem? So yeah, for example, you may have items which is which one vendor doesn't carry, okay, and well, you can split those items, okay, or you can have you may order a lot of items. For example, you want I don't know, you want many blackboards, right? And then there is no one vendor that carries that many blackboards as you need. Okay, so sometimes you need to split kind of this items from requisitions. You need to order from several places. Okay, and you can do it here. Since for each requisition you can have only one purchase order, you can create many. Okay, so you cannot order from many places, from many vendors. This is a problem. Okay, so this is not a good rule at all. Finally, why do we have here, let's optionality? Why sometimes we may have a request for item and not have a purchase order? Again, this is the same stuff as before. So with regards to this optionality, right? So we may have in our information system, we may have a record for requisition, but there may be no purchase order. Is it good? Is it bad? Don't know. So this is good. Why? Yeah, so basically you can have a request, right, but it takes time to create a purchase order, right? So it's not just you create a request and here's a purchase order. Okay, you create a request, then people, well, they may look at different vendors, different prices, and then they create a purchase order based on the request, okay? Or the request may have to be maybe also approved by people and so on. So there is a time lag again. So due to this time lag, it makes sense to have this optionality here. Okay. So what else is interesting here? This is okay. So this is something similar to which we discussed before, but let's look at this one. This is slightly different than we had last time. So we also had kind of payments, right? Collections, not payments, collections was called, and we had cash. Okay. So we have mandatory one, we have optional many. So which basically means that for each payment there is one instance of cash. And what is one instance of cash? For each payment we have one instance of cash. You have one cash account, yes. So for each payment you have one cash account, exactly one cash account associated with that payment, okay? For each cash account you may have either zero or many payments, okay? So, and I think the question is again with a zero. Does it make sense that you have a cash account, okay? And for that cash account you may not have payments at all? Yes, why? Say it again.
So if we don't make any order, we don't make no payment.
Can you elaborate?
You're saying, is it possible to have
Is it possible to have a
cash
bank account, cash account, right, without, for which there were no payments?
particular time there could be no orders that we need to pay for? So
Okay, so one point there may be, I think what you're saying is there may be a new cash account and, well, there can be no payments. Okay, good point. But other than that, so does it make sense that we can have a cash account and there may be no payments associated with those with this cash account? Amir, what do you think? Guys, you're accountants, right? I'm sorry?
People, yeah.
No,
So,
continue.
yeah, of course, because if people don't pay you right away, the cash account's gonna be.
But suppose people do pay right away.
But then you have bills to pay. And it's empty.
No, it's not that cash account is empty. So you have a cash account, okay, and for that cash account, there were no, say, past, so there were no payments, okay, that contributed to this cash account. There is and there were no payments that contribute to this cash account. So is it possible or not? No. Okay. Who thinks that it is possible? And actually, it is in every business. Guys, you're accountants. Was it possible to have a cash account which has nothing to do with payments?
You're operating
You can have other cash accounts. For example, you can have, so those are payments to vendors, right? Usually, companies have a whole array of cash accounts, right? So they would have a cash account for, say, collections, from customers. So those are for payments, say, to vendors. You can have other cash accounts which are not related to payments because, well, they are related to collections from customers, or, you invest in money, right? You may have a different accounts for that. So you may have temporarily accounts, right? So you may have a lot of different accounts, cash accounts, which are not associated with payments. Does it make sense? And actually, all companies do, right? So believe me, there is no company which have cash accounts just for payments to vendors, right? So again, think, right? Good. So this is basically, a very short take on this table. Okay, so we'll turn to this again in a moment, but let's think about, so you have this ER diagram, right? You have all these entities. You have resources, you have agents, you have events. So given that you would create a single table for company employees, for departmental employees, for purchasing agents, for receiving clerks, and for accounts payable clerks, okay? So you will merge all of those in one table, right? So you will create a table for employees, for all company employees. So given this condition, how many tables should we have based on this EER diagram? Steven, how many tables should we have? No, I don't think 19. Again, guys, as I told you, so all employees, right? Departmental employees, purchasing agents, receiving clerks, and accounts payable clerks will be combined into one table. Okay, so we'll have a table with employees. 15. Well, let's count. Okay, so the way to count it, right? So first you look if there are any one-to-one mandatory relationships, and there are no such relationships, right? So each entity, either resource, agent, or event, will have its own table. Okay, so you'll have 2 tables for resources, 6 tables for events. you'll have one table for vendors and one table for employees, right? So 2, 6, and 2 will give you 10. What other tables would we have? Should we have? Yes, we should have tables for many-to-many relationships, okay? Tables to represent those relationships. And how many-to-many relationships do we have here? 3 by 3. Okay, let's count. So one between inventory and quotations, then inventory requisitions, inventory purchase orders, inventory receipt of items, inventory returns. So this is 5, right? Are there any else? No, that's it, right? So we'll have 10 tables plus 5. We should have 15 tables. Okay. Yeah. So I didn't remember the answer, but yeah, that's correct, right? So we have 10 tables for entities and 5 tables for this many-to-many relationships. Okay. So given that you have 3 tables here which are, this bold face, right? And the reason why they are bold-faced is because those are tables which we used basically previously for revenue cycle. Okay. So you would have employees for revenue cycles, right? You would have inventory for revenue cycle. You sell inventory, and finally you would get cash. Okay. So those are tables from the previous chapter in a way, and all other tables are new tables. Okay. Good. So now again you can see that we have a vendor underlined. And why do you think? Why do we have vendors underlined? Actually, boldface again. Yeah. So why we have this emphasis on vendor number in some tables, not in all of them? Very good. Yeah. So basically these attributes, right, result in transitive dependencies. Okay, and those tables are not in the third normal form, right? And let me explain. So we have a receiving report, right? We have a vendor number. Okay, but if we know the purchase number, okay, we go to purchase orders, and here's the vendors. Okay, so if knowing purchase number gives us vendors. So in a way, vendor depend on purchase number. Okay, so this is this transitive dependency which we discussed before. And if we have transitive dependencies, then the table cannot be in a third normal form. Okay. Then if we look at payments, so we know what is receiving report number, right? So for each payment, there is one receiving report. Okay, so knowing payment, we know one receiving report. For that receiving report, we know exactly one purchase order. And if we know purchase order, we know the vendor. Okay. And and for this table of purchase returns, the same idea. We know receiving report, right? We know purchase order. Finally, we know the vendor. Okay. And as I explained to you last time, right, this may be evident from the ER diagram. So you have those direct and indirect links between table. Okay. So let's analyze, right? So there is a direct link between purchase order and vendor, right? And well, what do you mean by direct link? So again, think about it as an arrow. And this mandatory one is a pointy side. For each purchase order, there is exactly one vendor. Okay? Again, this is like an arrow. This is kind of points. Okay? If you have this mandatory one, it's kind of like this pointy side. So there is kind of a link from purchase order to vendor. Knowing purchase order, right, record, you know the relevant record from the vendor. Okay? For each purchase order, there is exactly one vendor. Is it clear? Then you have a receipt of items, right? Again, you can see kind of like an arrow. So for each receipt, there is exactly one vendor. Okay? For each receipt, there is exactly one vendor. So if we have this information, right, and you have this information. So for purchase order, you have exactly one vendor, and for receipt of items, you have exactly one vendor. But the tricky part here is that for each receipt of items, we have exactly one purchase order. So if we know the receipt of item, right, we have exactly one purchase order, and for that purchase order, we have exactly one vendor. Okay, then this kind of link is superfluous. If we know receipt of items, we know purchase order, we know the vendor. Okay, so here's kind of indirect link. Since for each receipt of items there is only one purchase order, for each purchase order there is only one vendor. You cannot have multiple vendors for receipt of items. You have exactly one vendor which you can trace through purchase order. So you have kind of indirect link, okay, to vendor. Plus you have direct one. So we got this vendor number in this table due to this direct link. Okay, this many-to-one relationship. If it's many-to-one, right, we take a primary key from the one side and put it as a foreign key on this many side. Okay, this is why we got this vendor number in the first place. However, this information, again, we don't really need it, since we can get this information through purchase orders. Okay, guys, is it clear? The same is true for payments, right? So that we have direct link between payments and vendors. Then we have indirect one. For each payment, there is exactly one receipt of item. For each receipt of item, there is exactly one purchase order. For each purchase order, there is exactly one vendor. So, you know, through receipt of items and purchase orders, for each payment, we can identify the vendor. Okay. So we don't need this direct link to know who the vendor is associated with this payment. Okay. So this is why we got this. So how should we deal with this, right? How do we deal with this? Well, basically, since this information is superfluous, if you want to normalize those tables, you just remove this superfluous information. You just remove the vendor number, and those three tables will be normalized. Okay? Again, we don't need this information in those tables, since we can get them through by linking other tables, through other tables. Okay? Do you have questions? I hear you talking all the time, you know, and I can figure out what you know. Do you have questions? So ask, or if you're discussing again, you know, we'll all would like to hear. Okay, good. So there is another inefficiency here. There is another table in the second normal form, but not in the third normal form, and which is again kind of similar to what we had last time. And this table is, you know, this number 3, vendors table. So I claim that vendors table is not in the third normal form. The question to you is why? Why table number 3, vendors, is not in the third normal form? Balance. Okay, yeah. So because we have balance in the table. And why balance is a problem? Yeah. So balance is a derived field. Balance is a calculated field. You can calculate it. Okay. So what is balance, first of all? Balance is, well, basically how much money we owe to vendor. Okay, to the particular vendor. So how can we calculate the balance? What do you think? So vendor is what we haven't paid to a vendor. Okay. So how to calculate, you know, this kind of debt to a vendor? You need what? You need two things here to calculate it, right? How do we calculate debt, guys? Any debt? how do you calculate the current debt? What you got and how? Yeah, but you paid for some items, so you will subtract them from the, your debt, right? So what should be the formula?
Total cost minus what you paid.
Total cost, right? Total amounts of your purchase orders minus what you have paid, okay? And the amounts in purchase orders and the what you paid is in payments, right? So you fix a vendor, you look at all purchase orders for that vendor, you sum them up, okay? So you have kind of, you have the amount that you should ultimately pay to vendor, okay? Then you look at what you have already paid. You look at, all records of payments to that vendor, and you sum that up. So you subtract amounts for purchase orders from the payment amount, and you get what you still owe to the vendor, right? So this would be a balance for a vendor. So this is a calculated field, and again, the reason why we have it here, right? Although it may result in some inefficiency, but it really reduces the load on your computers, on your servers. If we were for each vendor to calculate, each time the balance, it requires a lot of computation. So it is easier for us to put this field, balance, calculated field, and just kind of update it with each purchase order and with each payment. Okay. So this is why we have this balance there. So we won't change anything with this table. We just keep it as it is. However, we will get rid of this vendor number, okay, from those three tables. So again, what we do in normalization, we take these three tables with vendor number, we remove vendor number from those three tables, right? Okay, let's go back to ER diagram. So again, one way to see this kind of transitive dependencies, just like with vendor number, is try to imagine that those kind of connections, right? Those relationships are kind of like an arrows, right? So if you have a pointy side here, this is like a direction of an arrow. So payment, receipt of item, purchase order, vendor. So you have one arrow, another one, and yet another one. So you have kind of one big arrow from payments to vendors. And then you have a direct arrow from payments to vendors, right? So you can kind of trace those transitive dependencies in this way. But this kind of method, it's not, this is what they called necessary, but not sufficient, okay? Necessary means if you have something like this, right? If you have something like this, you have kind of those arrows here and you have a direct arrow here, then what it really means that there might be a problem. But there might be a situation where you have, again, kind of figure like this with those arrows, and when you don't have a problem, okay? And actually, on this ER diagram, there is another thing which may result or may not result in transitive dependency. So by just looking at this ER diagram, can you figure out what that is? Again, what you're looking for, imagine this is an arrow, this is pointy side, okay? So you have receipt of items pointing to purchase order, pointing to vendors, okay? So there's one link between receipt of items and vendors. And there's another one, direct link, direct arrow between receipt of items and vendors. So do you see any other situations like that on the slide? Purchase, return, and what? Yeah, but yeah. So this we know, right? So we have purchase returns here. Okay, so we have three tables. We have three entities, which are have a problem with the vendor. Let me give you a hint. This problem is not with the vendor. Forget about vendor for a moment. No. Let's look at the agents for this. Look at the agents, not at resources. It actually looks like kind of like reminds me of a puzzle, right? So you need to find something in a diagram. Actually, it's not that hard to find it, but no, nothing to do with receiving clerks. So some vendors, it's not receiving clerks, right? So you have 3 more agents: departmental employees, purchasing agents, and accounts payable clerks. So can you say it again? This is what? So you have purchasing agent and what? Okay. Yes. So look, so you have purchase returns, right? So for each purchase return, there is exactly 1 receipt of items. For each receipt of items, there is exactly 1 purchase return. For each purchase return, there is exactly 1 purchase agent. Okay. Then, on the other hand, for each purchase return, there is a direct link between purchase returns and purchasing agent. Okay. So just like here, like we had with vendors, right? We had kind of these different links. We had a direct link to vendor, and we had an indirect link to vendor. Okay. Here we have the same with purchasing returns and purchasing agent. So we have direct link, okay, this one, and we have indirect links. So from purchasing agent, purchase returns to receipt of items, to purchase orders, to purchasing agent. And depending on how it is organized, this might be a problem or this might not be a problem. Okay, so we may have an inefficiency or we may not have an inefficiency. Okay. So what do you think? Again, guys, here this is something to think. Okay. When can we have inefficiency, right? When this can result in a transitive dependency, and when it will not result in a transitive dependency. Okay, so what is the problem? Essentially, the problem might be that in this table you will have you'll have purchasing agent as your foreign key, right? So you have ID, purchasing agent ID is your foreign key, but this information might be not needed, since you can trace this ID through those other tables. Okay. You have purchase returns, you have receipt of item number, you have receipt number. Okay, look at this. You have receipt number, you look at purchase order number. You have this. You have purchase order number, you have purchasing agent number. Okay. So this is kind of what may be a problem here. But my point is that this might be a problem, this might not be a problem. So what do you think when this is a problem and when this is not a problem? Okay, let me ask you a different question. So when is it possible that, suppose you don't have this link, right? Suppose you have only those links. When is it possible that you can't figure out through this link the agent who initiates a return? Suppose you don't have this direct link, right? And sometimes it may not be possible to figure out an agent who initiates a return. Why? Even though if you have this kind of link, for each purchasing agent there is a receipt. There is a receipt, one receipt. For each receipt there is one purchase order. For each purchase order there is one purchasing agent. Okay, very good. And then what? The actual agent. So, well, almost there. Well, the idea is that, you know, if you go kind of this through this indirect links, right, you will figure out person agent who created a purchase order, right? But you may have a different person agent initiating a purchase returns. So if one person deals with purchase order, the other one deals with returns, okay? Although they're person agent, so those are not the same people, okay? So hence, you know, you will have no problem. If the same person handles purchase orders and if the same person handles returns, well then you know, then this information about purchasing agent in this table might be superfluous, okay, since you can trace, so you can always trace a person who created an order, right? But you don't know if the same person returned, well, some items, okay? If the same person returns, then, well, this is a problem. If you have a different person who creates returns, then there is no problem, okay? Next questions? Again, you kind of have to imagine how this works, right? Well, it takes time, I guess. Good. So let me quickly go through the rest of the chapter. So this was kind of the most important part. Let's look at DFDs. So this is context DFD. Again, the most, you know, the hardest part is to figure out ER diagram. Once you have ER diagram, the rest is more or less easy. So you have this system, you have this inputs, you have outputs. What are the inputs? Requisition data, purchase order data, receiving data, payment data, returns data. From vendors we have item prices and you have invoices. What is the output? Purchase order to vendors, payments to vendors, debit memos to vendors, okay? So very easy. So given you have context DFD, well, then you create level 0 DFD, right? So here's a level 0 DFD. And again, very easy. What you do, you go back to ER diagram, right? You have this 1, 2, 3, 4, 6 items. So you have 6 business processes. You have all those agents here. So all those agents should be in your DFD diagram. You have 2 resources. There should be tables for those resources, right? Finally, have connections between resources and between events, between agents. And then you also have connections between events, which should result in a connection between your business process. Okay. So when we go here, you have 6 business processes, right? You have all those agents, as we discussed, right? And again, you know how agents are connected to those, right? Since you have connections, you have relationships on ER diagram. You have tables. You have sometimes have those tables for relationships, for many-to-many relationships. For example, items ordered, right? What else? But there is a typo in this DFD diagram. So can you find a typo? Given that you built your own DFDs, you've seen many examples of DFDs by now. So can you find a typo on this recording DFD diagram? There is a problem with this diagram. What is the problem?
The requisitions isn't accessing the vendors table.
Well, supposedly, well, maybe they don't need vendor stable. Yeah, maybe not. Okay, so this may not be a problem.
1.0 and 2.0 aren't connected in any way.
Yes, exactly. Requisitions are not, well, not just quotations, but actually, this is a minor problem. The bigger problem is that requisitions are not connected to purchase orders. Although I do agree, right? I think, well, at least, okay, maybe quotations should be connected with those, right? And are they, by the way? They, well, they're not really connected. So first thing is quotations which aren't connected to purchase orders, but this might be fine according to ER diagram, right? However, so there is no kind of direct relationship between quotations and requisitions or quotations and purchase orders. However, there is a direct relationship between requisitions and purchase orders, right? Between 1.0 and 3.0, and it's not here. 1.0 and 3.0 are not connected, although you only, create purchase orders based on your requisitions, right? So this is the problem. And, well, at least this is one major thing. I don't know, maybe there's some other minor things, but definitely those two processes should be connected. Questions? Okay, good. So let's quickly go through all those Access implementation very quickly, and then you'll go on a break. So, in Access, again, these chapters 12 and 13 are great for your project stage number 3. Great reference. Actually, in the book, I think you can download all of those Access implementations, so you can take a look how it is done. Okay, so you can do something similar for your project stage number 3. So you have all these tables. There's 15 tables that we had, right? 10 tables for resources, events, and agents. Again, guys, please take a look. Note this. Resources on the left, events in the middle, and you have agents on the right. Plus you have 5 tables for this many-to-many relationships, right? Okay. So, and I showed you how to create these relationships in Access. Very, very easy. Drag and drop. Good. So you have all those tables. Then next thing you have to do, well, at least according to this steps in the book, right? There is a 6-step implementation process. You create forms for each what? Process. First you start with processes. For each process you create a form. For example, one process is purchase requisitions, right? So here is kind of form that is kind of a user interface for those people who create requisitions. So you can put requisition number, date, employee number, name, department, and then items that you would like to have in your requisition. This is a form with a subform, right? There is one bigger form, there's one smaller form. So why is it a form with a subform? Why do we need form with a subform here? What do you think? Why do we need this smaller form? This one. No. No. Again, very easy, right? Let's go back. You have a requisition and you have what? Inventory, right? So for each requisition, you may have many inventory items. So because of this many part, right, you need kind of, some ability to input many items, right? And this embedded form, this one, allows you to, embed many items for requisition. This is why I have a form with a subform. Okay? Very easy. Whenever you have this kind of, for one thing you have many things, it makes sense to create, form with a subform. Okay? Questions? Good, good. So then you have event recording forms. Again, so you have a quotation, right? So quote number, vendor number, items, right? So all of these are relatively simple. I won't spend much time on this. Oh, here's actually an interesting part. What you can do in Access, and which I don't require to do, you can create kind of buttons, okay? If you press a button, something will happen. Okay, as a calculation, or you will input this in database, and so on and so on. So what great thing about Access and about, say, ERP software, okay, that you can create very complex things, right? And you can program interfaces. So this button may do, well, this is a simple button. It will probably also calculate tax, shipping, handling, total, right, and record this. But some buttons can be, very tricky. They can do a lot of things which are hidden from users. So users don't have manually to say calculate tax, okay, or calculate shipping to check, well, where do we ship, what are the zip codes, what are the rates, and so on. So you can program this into forms to this kind of user interface, okay. So here is example of query, right? So actually we won't spend time on this a lot. There's another query. So I show you that. These are forms for maintenance processes. So for each resource and agent, you should maintain each resource and agent. And for that reason, we create a form for maintenance, right? You may want to add a record, you may want to delete or modify a record. So you do those things through forms. Okay, good. So let's skip to auditing. Okay, so how would you audit things, right? So while you come to client, given that he gives you an access to ERP, how would you audit? Well, there are many things how you would do it. So one way would be to try to, for example, create a record with the primary key that has been there before, right? So you would test anti-integrity, right? Or you may try to input negative values, okay? So you may test whether controls are in place. Okay, so one thing. Another thing would be to look for problematic, things. So you can create various queries. So let me show actually examples of queries. Well, for example, you would like to see whether the amounts on the purchase orders match, payments amount, match those checks, amounts on the checks, okay? So you create a simple query, you link, well, so the tables are already linked, you don't have to link them, okay? And you tell, well, show me payments, show me voucher number from payments table, show me amount from payments, right, amount on checks, and show me amount on purchase orders, okay? And purchase orders are linked to payments through these receiving reports. So there is a connection. You can merge two tables together, and you can see whether those amounts match. If they don't match, well, there's a problem. Okay, so this is one way to check, if amounts match, what you paid for and what you wanted to, if those things do match, do agree with each other, right? Okay. Finally, before we go on the break, just like last time, well, what do you do if your business rules have changed? So companies often change business rules or business processes, right? For example, we said that, well, we had a purchase order, and for each purchase order, there must be exactly one requisition, okay? And what was the problem with that? For each purchase order, you have one requisition, not many. You create an order, and you cannot create an order for many requisitions. What is the problem here? Guys, we discuss it. Actually, you might have the answer. Huh? And why this might be a problem? Discounts. Okay, so you would like to order a lot of things from a vendor. Well, you cannot, since all those things are distributed through different requisitions. You can combine them, so you will not get a bulk discount. Suppose some AIS guys figured it out, okay, in the company, so they decide to change this rule, okay. So they would allow many, for a purchase order, they would allow many requisitions, so they would allow to combine requisitions together. So what you do, okay, if you want to implement this, you basically should create a new table for this many to pseudo many relationship, okay, and you populate this table with information from the old tables, and this is it. Well, maybe you have to add some controls and some other things. Maybe you have to create forms, but at least this change should not take a long time. and should not be, very hard to implement. Okay. So good. So let's make a break until 8:15. 8:15 is good. Okay. 14. Okay. So chapter 14. So in two previous chapters, right, which we discussed last time, which we discussed today, Daria. So previously what we did, we looked at each subsystem, right? First we looked at this revenue system, AIS, and then we looked at the expenditure, AIS. Okay. So today we'll talk, well, how would you merge them? Okay. Since AIS is not just, you don't have a separate system. You have this enterprise-wide system, okay, where you have one database and all things are connected. So expenditure cycle is connected with revenue cycle, right? Plus you have like something related to payroll and so on and so on. So they basically we'll talk about this, how do you connect everything, right? How you make this kind of closed information systems. Okay. So this is the idea. So I have here handouts that I would like to give to you. Okay. Yeah. Well. Okay. I'll leave the slide. So handouts basically, describe yet another case of a company, and for that company you have revenue cycle, you have expenditure cycle explained, you have payroll cycle, and other things like acquirement or fixed assets, disposal of fixed assets, right, loans, and basically other stuff. So please take a few minutes. Let me just quickly browse through it. Okay, very quickly. It's very long, but. Sorry.
What was this for?
This is a case where for company here you have revenue cycle, you have purchasing cycle included, plus you have payroll cycle and other things, right? So kind of you have everything here, more or less. What it is? Yeah, I'll take. Oops. No, this is a different one. Oh yeah. Sorry. Here. Let's just quickly browse through it, very quickly. Did he give those to you?
Yeah.
Oh, good. So anyway, let me quickly explain. So you have a company, right? And you have this expenditure cycle explained, revenue cycle explained, and well, you have a brief mention of other business cycles here. Okay. So again, the idea of this chapter, okay, in this lecture, is to show how all of those are connected together, right? Okay, so I think I think I'll explain more. So I think that's enough of reading, a lot of reading. So anyway, you can see here significant events, part of which we discussed before, part of which are new, right? So you can see that first we have some business events related to this purchasing cycle, right? So you need to get quotations from vendors. You need to create requisitions, you need to create purchase orders, you need to pay for those orders, you need to receive those items and possibly, well, return some of this, right? Then you have sales, right? For sales, you have customers who create orders, right? Sales orders. Then, well, you have to ship items to them. Okay, then you have to collect money for this. Finally, you have to, there may be some returns, allowances, right? What is new here is, well, there is also this payroll cycle, so you need to hire employees, you need to pay employees, well, and you need to terminate their jobs, right, sooner or later. Then you have other things. You have to pay utilities, you have to acquire and dispose of fixed assets, and finally you have to, well, not finally, but this is one thing, and you also have loans, right? So the company may want to take a loan, and well, they have to also pay out the loan, right, later, with interest. Okay, so those in red are new, those in black are old, right? So those in black are related to revenue and expenditure cycles. Those new significant events are, well, new, okay, which we didn't really discuss that much in detail. But all of you should be familiar with them through other accounting courses. Okay, so let's go back and discuss something called the closed world principle. So you have this EER diagram, right? You have, and just which we discussed today, because this is this expenditure cycle, and you have two resources here, cash and inventory. So if you look at this diagram, what is strange about those resources? What is strange about cash and inventory? I think cash is easier. So you have a cash, right? You have just one event related to cash. So what is strange about cash? No. Well, it's not really strange, but no. So again, the idea is this kind of this closed world principle, right? That you have a system which should be closed. Okay, what is not closed here? What do you think? Or you can immediately tell that this is not a closed system. And why you can tell that the system is not closed. So, well, suppose someone would give you this EER diagram, right? And even if you don't know about other cycles that are there, okay, they would ask you, well, what do you think, is this a self-contained system or a closed system? So what will be your answer? No. And how would you reason it? Why is it not a closed system? Yeah, why it's not a closed system? How would you reason? And again, I'll give you a hint. Look at resources. So if you look at cash, what happens to cash? Say it again?
It comes in and out.
No, it does not. It only comes out. That's a good point, right? So it only decreases. Do you see cash increases here? Cash is not increased, so it's always decreased, right? So at some point, you will run out of cash, right? So the system cannot work, right? What about inventory? No, come on, this is a purchase cycle. You always buy a new inventory. The whole idea is to buy inventory. So, but what about inventory? It's not, you never decrease inventory, okay? So this closed world principle is when you have resources and each resource is decreased and increased, okay? Each resource must be increased and must be decreased, okay? So when you look at this, at such ER diagram and you have resources which are not increased or decreased, so either there is a mistake with this ER diagram, and here there is no, well, let's suppose there are no mistakes here, or this ER diagram does not show you the whole information system, okay? So you can immediately tell that this is not the whole story. So the way to solve this problem is to, well, we should have something that increases cash, And you should have something that decreases inventory. And what would be that? Something that increases cash and decreases inventory. Sales, exactly. So what you can do, you can kind of put all of this together, right? We had chapter 12, chapter 13, right? In one we had revenue cycle, in another one we had expenditure. So let's merge them, okay? Great. So here you have 3 resources, right? We have inventory, we have cash. Actually, before we go there, let's look at events. So is there something new? No, actually nothing new. So basically the same events that we had before, right? So the upper part corresponds to purchases, right? And the lower part corresponds to sales, okay? But there is a difference actually. I hope you do remember those ER diagrams that we discussed at length today and on Tuesday. What is different here? There is something new which was not there before. Well, actually, there is one new event which was not. I'm sorry? No, this event was not there. We had return and allowances. What now we allow? We have a separate event, okay? And for this event, we have a returned merchandise, okay, which can go back to inventory. So if you have merchandise and someone returned it, right? Well, they didn't like it. And well, if it's perfectly fine, you may put it back, never opened, right? You can put it back in your inventory. If it was opened, well, you can refurbish it. Again, you can put back it into your inventory. You know, if it's defective and you cannot save it, it's a scrap, well, you can remove it, okay? So for each, you know, return merchandise processing, you can have either 0 or many inventory items. Does it make sense? 0 or many, right? So no restrictions, right? So what does it mean? Well, okay, let's talk about 0, right? First, so you can have a process called return merchandise processing, okay? You got the return merchandise, you look at it, and then for this process, you may not increase your inventory, okay? You may have an items which were processed after returns, which did not go to inventory. Is it possible? Is it possible, guys? Someone returns you inventory, right? You have returned merchandise. You have returned merchandise, okay? Yeah, so it's defective, it is crap. Okay, you don't put it back to your inventory. Possible, good. What about many? So can this process result in, you know, in increase in many items in your inventory? Yes. Why? Yeah. So, you know, customer may have returned many items, right? So you take this many items, they are perfectly fine, say not opened, you put them back in your inventory. What about that one? Each inventory item can or cannot be associated with returned merchandise processing. What about this optionality first? That you have an inventory item and that item may or may not be associated with so this returned merchandise processing event. Is it possible? No, this is a different thing. So it says, well, basically, you can have an inventory item. You can have a, I don't know, you can have a thing, right? You can have a PC which never had to do anything with a return. Is it possible or not? Of course it is, right? So you have new items, you never sold them, right? So you may have items in your inventory which were never associated with returns, right? Or about many? That you can have an item which, you know, was returned many times. Is it possible? Yeah, right. I think it is possible, right? Okay, good. Just so this is something new, and now if you look at this EER diagram, so does this EER diagram represent a closed world? What do you think? Again, definition of closed world is when you have a resource and each resource is both increased and decreased due to some business events. Yes, the answer is yes. Yeah, right, so why yes? So let's take cash, right? When is cash increased? From sales. When is cash decreased? What about inventory? When is inventory decreased? Inventory decreased, yeah. Well, not from sales, well, I think from shipments, right? When it is increased? From receipt of items. I think this is better, right? Not really purchase order directly, but when you receive an item, you increase your inventory. Okay, what about return merchandise? When it is increased? Due to what event? When you increase your returned merchandise, your returned inventory, in a way. When you accept a return, right? When do you decrease it? So you increase it when you accept the return, right? You decrease it when you do the processing, right? So either you scrap it, or you put it back in your inventory, right? So you do processing, right? This is decreases, this increases. Okay, good. So another thing which we discussed before, chapter 6, I think. So which we discussed before was this idea of duality, right? That some events can be dual to each other. And let me explain what events are dual. So if you have an economic event, okay, that result in increase or decrease of an item, then you should have another economic event which will also result in increase or decrease of some resource. Okay, so those are dual. And the reason why I'm talking about economic events, and what is economic event? Okay, let's start with this one. What is an economic event? What kind of transaction? Okay, what is transaction? So a definition, good definition of economic event is an event that results in exchange of resources, okay? So not all events result in are not economic events. For example, is quotations an economic event? No, why not?
Because you're not receiving it, or you're not giving it.
There is no exchange. Okay. What about receipt of items? Is it an economic event or not? Why? Receipt of items. So is it an economic event or not?
I'd say yeah.
See, yeah, it is an economic event because there is exchange. So what kind of exchange is taking place here? So you receive an inventory. Okay, what you give back? Money. Okay, so which event gives money here due to your receipt? So one event increase inventory. Okay, so you increase inventory, but you get, you give back something. You give back money. And what event gives back money for your inventory which you received? Payments. Okay. So those two events are dual because they are in the same exchange, okay? They result in the same exchange, okay? And you can see, well, one increases inventory, the other one decreases cash, okay? So another economic event, say, is collections, right? So which results in increase in cash, but you give something back for that. What do you give back? Inventory. And what will be, so the question, what will be a dual event for collections? Sales does not decrease inventory, but shipment does, okay? So collections and shipments are those economic events which are dual. Okay, good. So we have two ideas. One is closed word principle. So if you have a resource, each must be decreased and must be increased. The other things is that you have economic events that should be dual. Okay, so if you have exchange, there should be two economic events which are dual to each other. So one would result in decrease in resource in that exchange, another would result in increase of some resource in that exchange. Okay, good. So what we can do next, right? So if you look at this ER diagram, it's very cluttered, right? So a lot of stuff here, hard to read, right? So we'll kind of cheat on the next slide. What we will do, we'll take all those sales-related processes, right? Which are those on the bottom, and we will kind of combine them into kind of one event. Okay, so we think of this as a subsystem. Then we'll have another subsystem for purchase-related processes. Okay, so we kind of combine them into one thing. So this makes this diagram look slightly better. But if you really want to, we can kind of drill down. We can drill down and and we can see all the details. But let's look at this kind of overview, right? So we have a process related to revenue cycle. We have process. Revenue cycle. We have process related to expenditure cycle, right? And again, you can see that they are connected to resources, inventory and cash. So those purchases, right? So they result in increase of inventory and decrease of cash. Sales result in opposite, right? Result in decrease of inventory and an increase in cash. Okay, good. Then we have other events here. So we have three events which are associated with payroll, basically. Okay, with HR, with your employees. And then we have event for other expenses. Again, this is probably a collection of many things here. You have processes related to assets acquisition, assets disposal, okay, fixed assets actually here. And finally, we have process related to loans, right? So so this is about loans, right? Acquisition and payments of loans. Okay. So we have a new resource, fixed assets, here, and we have actually two new agents. Okay. So we'll talk about those, but before we do it, let's talk about those HR processing: hiring, compensation, termination, and retirement, right? Okay. So again, this is very important whenever you design or whenever you review ER diagrams to understand what's going on. And you understand it through relationships. So you have hiring and you have employees. Okay, so how do we read this relationship between hiring and employees? Actually, this is the first time when you see this kind of relationship on the ER diagram. For each employee, there's exactly one you're hiring, and for each hiring event, there's exactly one employee. Okay, so this is mandatory one to mandatory one, right? And what do we do with such relationships? How do we combine them? We put them into one table. But, okay, so let's think about it, right? Let's start with this one. So for each hiring, there must be exactly one employee. So let's think about mandatory part, about must part. For each hiring, there must be an employee. Make sense or not? Makes sense, right? So how would you create a hiring without an employee? Okay, so for each hiring, you must have an employee. Good. So for each hiring, there can be no more than one employee, right? Yeah, for each hiring, there can be no more than one employee. Make sense or not? You create a hiring, right? So again, the way to think about it is as a table. You have a table, you create a record of hiring, and for this record, you cannot have many employees. So you can't have one hiring process for event for many employees. Make sense or not? Well, basically it says if you want to hire a lot of employees, you would have to create separate hiring records for those employees. Make sense? Actually, probably does, right? So you would have a different records for each hiring. Good. And what about this side? So for each employee, you have exactly one hiring. Again, I'll think about this mandatory part. So for each employee must be hired. Make sense or not? Well, you should write a contract, right, with employee. I think it makes sense, right? Good. Don't want to have illegal employees. Okay. Now think about it. Each employee may be hired only once. For each employee, you have only one hiring. So you cannot have a lot of hirings for one employee. So each employee is hired only once. Make sense or not? Only once, yeah. In most cases, I think, yeah, it does make sense. But there are types of business where it doesn't make sense. And when does it doesn't make sense?
When in every hiring,
You laid off for lack of work?
Yeah, layoff kind of work, right? Exactly. So lay off, right? So what happens, for example, you can have some industries, automobile industries, where there is a high demand. So okay, you need a lot of people, and then there may be different kind of situation where you don't have a lot of demand. Well, so you don't want those people to work. Okay, you kind of don't. So and you still want to keep information about the employees in your database. Okay, but you will kind of hire them again. Okay, or think about kind of seasonal employees or something. So so when you have this layoffs or you have this seasonality factor as well, this is not a good rule to have. Okay. So a more interesting part is this one: hiring and termination, retirement. Let's start with this one. So for each termination or retirement, there must be exactly one employee. Make sense or not? Exactly one hiring. I'm sorry. For each termination or hiring, there must be exactly one. For each termination or retirement, there must be exactly one hiring. Does it make sense? It does, right? So and why? What does it make sense? Well, if you fire a person, right? Well, there must be someone that you hire, an employee that you hire, right? Then if so the must part is obvious. So why one? You would for each person you would create a separate termination or retirement record, which again makes sense. But let's look at the other side. For each hiring, you must have exactly one termination or retirement. Let's talk about mandatory part. So actually let's talk about first, let's talk about ordinality part, right? This one part. For each hiring, there must be one termination or retirement. Does that make sense?
No.
Why not?
Because you could quit way before you retire or before you get terminated.
Oh, let's call this termination. If you quit, let's call this termination. Okay. So for each hiring, there may be no more than one termination or retirement. Does it make sense?
So you could work your whole life. If you don't want to retire, you don't have to retire.
You will retire sooner or later, right? So maybe in 50 years from now, well, unless you're a rabbit or whatever. So you will have to retire, right? So I think it makes sense. Okay. But what about this mandatory part? So for each hiring, there must be a termination or retirement event. This one is tricky. Huh?
Well,
You
it's
will.
termination
You
or
will.
it's termination or? Yeah. Okay.
Or you will. Does it make sense or not?
Yes. If we don't look at it as a
The truth is it does not. Okay, even the book actually discusses it says yes, but it does not. Again, guys, look. Now you should know this, right? You have two events, one-to-one relationship. So you create a single record for this relationship, right? So whenever you enter information about the hiring, okay, you have to enter information about termination or retirement. Okay, so the day you hired, you retired person. Okay, so remember we had this diagrams, we had this thing optionality here. This was due to time lags, okay? There's a time lag, so you may have a record of a hirement, but you don't have to have record of termination since this person still works, right? So here, this should be optional. Okay, otherwise there'll be no employees here. You would hire and immediately fire them, right? So it doesn't make sense at all. So that should be an option here. Okay, good. So what is else? Well, there's compensation. I don't think this is very interesting. Oh, okay. Actually, compensation is a very interesting thing. So when you look at the resources, right? We look at resources. We have inventory, cash, and fixed assets. So do they comply well with this closed world principle or not? Does our ER diagram comply with this closed world principle or not? What do you think? Guys, does our ER diagram comply with the closed world principle? Okay, what is closed world principle? Each resource must be increased and decreased. Okay, so if you look at this, is inventory increased and decreased? Yes. Is cash increased and decreased? What about fixed assets? Yeah, so, well, there are a lot of processes which both, well, you can acquire fixed assets, right? And then over time you have to dispose them, right, or whatever. So you will decrease them, okay? So, good. So we are fine in terms of this closed world principle, okay? Now let's talk about this duality. And what is interesting here is compensation thing. So compensation results in decrease of cash, right? And compensation is an economic event. So what is the event due to compensation? What is the event due to compensation? Again, what is a dual event? So you have two events. You have two economic events. One results in increase of resource. The other results in decrease of possibly some other resource, right? So you there's a trade-off, right? You spend resources, but you gain some other resource. So you have a compensation which decreases cash. Okay. So the question is, well, where is the dual event for that one? Yes. Not really. Well, no, I don't think so. So, okay, so I think one question would be, okay, so if we increase cash, okay, if we decrease cash, what do we increase? What you have a lot of employees, okay, so you pay them. Wait. Yeah, but look, so there is a reason why we have a cost, right? So it's a cost. So you have employees, you pay them, okay? So what do you get from employees in return? Okay, what do you increase? What is increased? What do you pay them for? What is the service? Labor. Okay, this is better. Labor. So, okay, yeah. So Wadley said labor. Okay. So you can think about labor as a resource. Actually, it's a very good example. Actually, I was going to say you pay them for their time. I was going to say hours worked. Okay, and well, labor hours worked is similarly related. So there is kind of missing resource here, labor or hours worked. So when you pay your employees for cash, in return you get, well, their labor, right, or their time. Okay, good. So so imagine here we have another resource, which is the labor, hours of work, whatever. So, and you know that this resource should, increase and decrease, right? And we know that when you pay your when you pay your employees, your labor or your hours worked increases, right? So the question is, when does this resource, labor, decreases? What events decrease that resource? No. I'm sorry? No, look, okay. Look, yeah, let me explain. So suppose you have another resource here, labor, right? So the idea is when you pay, when you pay your employees, right, your cash increases. Your cash decreases, but you have another resource, which is labor, which increases. Maybe think about hours, maybe that's a better, hours worked. So you have hours worked, right, and hours worked increases, okay? You pay them for their time, right? But as we said, there should be a closed world principle here, right? So something should decrease hours worked, something should decrease this resource. And what is that decreases that resource? This. Yeah. What decreases hours worked, or what decreases labor? Decrease. Increase, we know what decrease. You pay, you pay for the time. What decreases this? Their time. No, not termination. Okay. Sales. What else? So you pay for the. Okay. So imagine that that labor is the resource, right? You pay for labor. Okay. How do you spend this resource? I think it's a good question. How do you spend this resource? How do you decrease it?
How you decrease labor?
Yeah. So you pay for labor, okay? You pay for some work for their time, okay? So this is kind of abstract idea, but I think it's a very good idea. Actually, it's not that abstract. I'll talk about this. So, and you have hours worked, right? Actually, many companies, right? They do have this. What is it called? This timesheets, right? Manufacturing companies. They have people come in and they have timesheets. How many hours you spent, right? So this is like a resource. So how we increase this? We pay. How do you decrease this resource? How we utilize this resource? You're a company. You're a big manager, right? So how this resource is utilized? How it is decreased?
Like you were saying, sales.
Sales. Not just sales. Basically, okay. So your employees do some work, right? Some deal with quotations, some with purchase orders, some with of items, some with payments, and so on and so on. So each of these events will decrease your hours worked, okay? So your hours that are spent on this, okay? So each of this event will decrease, your labor resource, okay? So you pay them to do this thing, and this is what decreases their time, okay? Does it make sense?
You mean them processing returns?
Yeah, everything, right? So you have employees that are work, right? So basically you pay them for their time, and the way you spend their time, you tell them, well, do this, do this, do this, do this. This is how you decrease this resource.
So we're talking about like the actual time they're working?
Yeah, again, look, guys, so you all studied managerial accounting, right? And you had this ABC costing, right? Those drivers and so on and so on. So you all studied this, okay? So you have employees, so you would look at the cost drivers, right? And overheads, right? This exactly this, what we're talking about. This is why you have these timesheets. This is why you want to assign profitability or cost to employees, for example, to labor and so on. So, and this is how you can do it. You can create another resource, times worked, right? Like timesheets, and you can keep track of that. Okay. So this is not here. So this kind of ER is not really complete since you have a resource, you have this compensation, and you don't have a dual event for that one, and you don't have a resource, this hours worked. Okay. So dual event to compensation would be all events related to your employees working, doing something. Okay. For example, creating purchase orders, creating requisitions, and receiving items, and so on and so on. Okay. So again, this is one way to think about it. So again, so this AIS stuff, right? So I think it is interesting. Well, if you don't like database, if you don't like systems, if you don't like technology, right? But what you should appreciate as accountants, right, or as or from this purely economic standpoint or finance standpoint, is a way kind of how you can create this, right? So you can really put all this concept that you learn in your classes here, okay, when you design it, or when you review it, or when you do auditing, whatever. So all the things which you discussed, right, which were, well, a lot of, you kind of couldn't really see how it works, you can put them in your design, in your information systems. Okay. Good. So what else it's interesting here? Well, so you have assets-related process, right? So you acquired fixed assets, right? And well, you also decrease fixed assets, right? So what are fixed assets? Do you remember? Or should you remember? Yeah.
It's like machinery. It's things that you don't sell to any regular person.
Yeah, this is basically what helps you to run your business, right? So buildings, land, equipment, and so on. Okay, and then you have loans, right? So this is different from inventory, right? This is what you sell or you acquire. This is what you use for your business. Then you have loans, so you can borrow, right? And then you have to pay them. So you have another processes here. Okay, so this is kind of one way how you can create this enterprise-wide repository, right? So you have this many things, and you see that all the cycles here are connected through resources, through agents, and even through events. Okay. So actually, let's just discuss that. So if you will follow these rules, which we had, for the tables creation, right, from ER diagram, you will get, new tables. And well, that's not something really interesting. So okay, so let's talk about something else, which is interesting. So you have this ER diagram, right? So this is how your business should operate, okay? But this is not what sometimes happen. For example, well, okay, let's take a silly example. Have hiring termination, right? So you won't do that, right? And sometimes you may have exceptions. Well, suppose you decided to hire someone and not to terminate him, okay? So you didn't follow the protocol by this ER diagram. Or you have some kind of sales that are not captured by your AIS, by the system, okay? Or you might need to make some adjustments to your accounts, which is again not here. So this thing is great for, say, 90% of your business operations. Well, 99. But there's still 1% which is not really covered here. Those things which are kind of rare. So what do you do with those, right? So your system doesn't really process them. And the idea is, just as what you would do in traditional accounting. So if there was some transaction, for example, you hired someone, right? Although you cannot, you would create a record, say in your something like a general ledger, and all those events, all the things that doesn't really fit your AIS, well, your design, would go there. All transactions which, say, you need to report under GAAP, okay, but which are not really captured here, will go to this kind of special table, kind of this general ledger type of table, okay. So 99% will be captured here, and you will use this to create your reports, but some things like adjustments, or for example, you didn't collect money from customers, something like that, may go to your other table, okay? And so all those kind of adjusting entries. Then when you will create reports, you will use both. You will use both information from your AIS, and you will use this kind of table with your non-standard, non-routine transactions, okay? So this is the idea, how you deal with those non-routine things. Okay, questions? So everything that is kind of non-routine, right? So you put them in a special tables, okay? You describe, say, these non-routine transactions or adjustments, and then when you create your financial statements, you use your main tables, and you use this kind of adjusting information from your table, which you created especially for that purpose. Okay? Is it clear? Good, good. So, again, let's quickly go over advantages which we discussed in Chapter 1 of this enterprise-wide repository. So what are the advantages? Well, first of all, everything is integrated, right? So you have one application which can access all the data in your system, right? So you don't have to, it's not fragmented. It's everything all together, right? Then, well, we spoke about data redundancy, right? So there is no redundant data here. You store everything once. You don't store it many times, right? Then you can create these cross-functional queries, right? So if you want to know, well, what are vendors for which so you have items, right? And you sell those items. And some items will sell better, some will sell worse, right? So we'd like to know, well, what vendors provide you items which sell better, right? So you can do that very quickly using this database. If it was traditional accounting, well, you would have to call different people, they would have to check records, you would have to merge records, so it would be very, very hard. But now this is easy, right? You can have controls. We talk about controls, especially, which is great, you can have a lot of preventive controls, right? Traditional accounting, you would, well, there is some number, you would find that there is a problem with this number kind of after the fact, okay? And this may result in a loss. Here, you can prevent a lot of things from happening using this database, right? So this is kind of idea. So what we now talk about, something slightly more than just database. We'll talk about ERP. So database is great, right? But people don't work directly with a database. There is something else which helps you to deal with a database, okay? And this is ERP. So what is ERP? Well, as we discussed before, and we'll discuss right now. So when you have a system, right, we have this kind of ERP system. We have 3 layers. We have a database, which we discussed so far mostly. Okay, you have this application layer, which does all this kind of processing, and we have a presentation layer, user interface, right? So ERP is kind of everything. So this architecture where you have both presentation layer, application layer, and where you have database. Okay. So ERP, well, nowadays I think most all 500 Fortune companies have ERP installed. So those systems cost a lot of money and are very hard to implement. Okay, this is why they cost so much, because this is a huge system, very complex system, very hard to put them in, very hard to tweak them, okay, customize them. So those are ERP, and you should know the major vendors: SAP, Oracle, Microsoft, right? So those are the biggest one. And today we'll talk about SAP, actually, as an example of an ERP system. Again, very, very briefly. So, why do companies convert to ERP, right? And again, this is something which we've discussed before, but let me just remind you. So first of all, this was to Y2K problem. And I told you that basically Hershey's, well, converted to ERP because of this problem, right? The problem was with the date, and that when we would switch to new millennium, the computers would think that the current date is not 2000, whatever. You think it would be, date would be 1900. Okay, so this was the problem. So, and many companies thought, well, if we will spend a lot of money, billions and billions were spent, right? If we'll spend a lot of money on correcting these mistakes, maybe it is better to put a new system, a new different system, and not correct the old one. So many companies decided to switch to ERPs due to this Y2K. Then some companies thought, well, we have this business process which was working fine for the last 30 years, but we need to make some major changes. So we should reinvent our business process, okay? This is another reason why a company would implement ERP. So it's called business process re-engineering, okay? Then other companies will think, so our current process is not efficient enough. So it's not good. So we don't have this cross-functional, can create cross-functional queries, right? We are slow. So let's implement an ERP system. Others will think, well, let's automate things, right? So so again, this is why we should have an ERP system, okay? Finally, this is especially true for e-commerce. So you have e-commerce, which is a new type of business, right? And you don't have this kind of employees and people calling them. So you go to Amazon, you just make a few clicks, and the system does everything for you. Okay. So if you want to kind of do this kind of business, okay, so traditional accounting systems won't work. You have to implement ERP, like it or not. So if you want to do you want to implement new ways of doing business, and again, many companies out there do offer some online services, right? So this is what you should do. You have to convert to ERP. Okay. So this is the reasons why we use ERP. So just to give you an example, and actually I gave you a small example, but let's look at the bigger one. How powerful is an ERP? Suppose you have a salesperson, right, which would like to, generate a quote for some computer, right? Then you have a system, right? Not a person. That would kind of, based on requirements, create, product configuration. Basically, look at the requirements of a user and say what would be the best system for his requirements. It would estimate the delivery date, okay, and shipping, well, based on the shipping method, okay. But if you think about it, so how do you estimate the delivery date? This takes a long time, right? So there are a lot of things involved, right? Well, actually, if you look here, you have to reserve material, right? You have to order part, you have to schedule assembly, and so on and so on. Finally, you have to schedule shipment to send it, right? So there are a lot of things involved, and there's a system which kind of estimates what should be, the shipping dates. I'm not sure if you have seen, but I think on some Discovery Channel there was they showed how UPS works. This is amazing, So so they have a very complex system. They kind of because they have automated warehouses where all those shipments are managed. So the system takes into account all airplanes or trucks deliveries. So and it can really estimate the best dates and costs for shipments. So those things are very complex, okay, and this is what ERP system can do. Then it can do other things, right? Check customer limit, update this forecast, maybe production schedule, right? It will create MRP. What is MRP, by the way? Material requirement planning. Material requirement planning, right? So basically, again, this is especially important for just-in-time business. So you have to think, well, okay, what will be demand for my product? What materials would I need to, say, assemble these products? And again, you want to, you don't want to have a pile of materials. You would like to keep your material inventory as low as possible. Okay, so so basically, there's MRP, bill of materials list. You would update payroll. You would update, some forecasts, right, of profitability and so on, and of course update records. So, and this is kind of done with one click, right? So user just wanted to generate a quote, and here you go. All the things are done automatically. All of the things involved different cycles of business, right? So this is a very, powerful features of ERP. So it can do really a lot. Okay. So let's talk quickly about implementation. Again, so we talk about this, but let's think about some parts, right? So, so if you want to implement ERP, well, you need to have people who understand how this works, right? So you need, well, internal people, and you need some consultants, right? Or people who would tweak system for you. You need managers to kind of express a desire to do it. Okay, and with managers, some managers, again, don't like quiet technology. Other managers, will work for, say, 5 years in the companies and will go on, okay, go to other companies or retire. So this will really, take time commitment. Okay, it can take 5 years to implement an ERP system. So managers should be committed. Actually, and the same is for senior executive. Okay, all of them should express support for this. One very big deal, I don't really recall if you discussed it or not, I think we did. So if you implement an ERP system, most likely, well, very likely, actually, this is true, that your business process would be reinvented. And what this means that people, kind of, if you have a politics, if you have a company, you have politics in a company, okay? You have different people and they have different relationships. And they have different duties, right? So some, are bosses or other people, well, you just need to call to know something, right? So you have kind of this set of relationships. So if you implement ERP systems, your business process will change and you will have a different kind of relationships in your company, okay? And so someone who, before had a, I don't know, some kind of a powerful person in a company may not become, as powerful. For example, people who ship items, right? Now they will be automated. And other people who had less power will have more power. So there will be kind of a lot of change in management and politics in the company. And many people don't appreciate it and would try to prevent this, okay? So what else? Then, well, if you implement the system, as we discussed, there is a lot of things to do, right? So it's very hard to tweak a system. Basically, what is ERP system? This is kind of like ready packages, but you have to customize those packages for your business needs. So they have a lot of the switches and triggers, so you kind of have to set them up. And there are thousands of those switches. Plus, you have to create tables and, by the way, regarding tables. So what do you think? How many tables a typical, say, Fortune 500 company has?
Couple hundred.
Thousands of tables, right? So here we had 10, 15, 20, 50. So they have thousands of tables, okay? So it is very, very complicated. And then, we said, well, if something changes business process, well, it's something you can create a new table. That's it. It's not that easy. So it's also hard to make changes in ERP systems, and you have to make changes all the time. And even the software can be updated, right? So you should get this continuous support for your software. So this will always kind of implementation phase, right? You always will do some changes with your system. Okay, then we also talked about training. So you have ERP systems, well, you need to train your people, okay? And well, we discovered this is a problem, right? So when would you train them? Would you pay them for training? You probably would have to test their skills. Well, there'll be some logistics problem and so on and so on. So training is a big issue for employees. And then it will probably require people to have more skills, especially computer skills, right? So before they have never dealt with the system, and now they have this computerized system, those forms, and they have to understand how it works and how to deal with that. So yeah, so this is a problem, a huge problem actually, this training. Okay. So here you can see this kind of costs of ERP, which we discussed. Well, training, right? You have to customize and those switches, right? Those thousands of switches. Data conversion we discussed. You have all data, right? All applications. Well, you have to put them in a new system, and you may have data inconsistencies in place, and so on and so on. So a lot of things here. Okay. And it will take time definitely to get money back from your investment in ERP. Okay, but this is what it is. Okay. So let's talk about one example, SAP. So SAP is the biggest ERP player out there. Okay. So SAP was founded by actually guys from IBM. So the company has been for a long time there, and the current version of SAP is this R3. Okay. Well, it's not really a version. This is kind of current software, but they have different versions. Okay, so it's it's not that it was released in 1992. That's it. So each year or so they update it. Okay, although it's called still R3, right? R/3. So they have a special language for it. Okay, so Advanced Business Application Programming Language, ABAP. Okay, so basically we talk about COBOL, right? This was a language for business. So SAP designed their own language for their system, and everything is programmed in that language. Yeah, so this is the idea. And then the system is modular. So you'll have there are three main types of modules. So there's a module for logistics, module for financial module basically, and human resources HR module, right? So what else is interesting about SAP? Oh, so it's read. You don't read it as SAP, okay? Which is not the best word in English, but you read it as SAP, okay? No SAP, okay? So you have this SAP system, right? So again, this is kind of a leading system, so most companies have SAP. One thing that I should mention, although the ERP system can be SAP, right, they still have a database. Database can be, say, Oracle, okay? So database is somehow different from ERP, so from this kind of application layer. So an SAP may work with different types of databases, as long as it is a relational database. So this is slightly different. Okay. So here is the structure of SAP modular structure, right? So greens ones are those logistics modules. The red ones are financial modules. Then you have HR modules, and you have two other modules. One is module for an industry. So if you have an industry like utility, right, and then you have a banks, and then you have, say, airplane company. So all those companies in those industries, they are very different. They have different needs. They operate differently. So this is kind of module which allows some kind of customization as per industry. Okay. Workflow is simply, kind of way to have this flow of operations between different cycles in business. Okay. So, so I told you there are this industry solutions module. So this kind of, you have different industries, and all of them will kind of be different, right? We'll have a slightly different implementation of SAP. And here you can see some of those industries. What I want to talk about is, this a presentation application database layer, right? This three-tier client server system. We should already discuss a couple of times, but let's go back. So you have a graphical user interface for SAP, okay? So this is presentation layer. This is what we see as end users. Then there is an application layer, which is kind of hidden, right? You don't see it. So application does basically all processing, okay? So all calculation, all queries, everything is handled by this application server. And then application is connected to a database, right? To what we studied so far, those tables, right? All of the things are database. And so you have this kind of three-tier system. You have people, say, using desktops, right, like this, for the presentation layer. Then you have a separate servers, computers, for application layer. Then you have yet separate computers for database that store all the data. Okay, so this is this three-tier client server architecture system. Okay, right. Questions regarding this? No? Good. So this is kind of, actually I think this is an old one. This is an old graphical user interface for SAP. So in the old days, well, not the old days, but you would have to run an application on your computer, right, to get this kind of interface. It was like a program. You run a program, okay. Then you get access to the system, you get access to the application and database servers, right? Nowadays, they have this My SAP, and it doesn't require to have this program. You do everything through kind of like a web browser, okay? So you open a web browser, you input, IP address of some machine, and this is how you get this interface. What I'm trying to say is that you don't have to install a software nowadays for a graphical user interface. As long as you have a web browser, you're fine, okay, with this My SAP. Actually, one thing about SAP, I don't like the interface at all. So they have a, the interface is very bad usually. Okay, they have great application, the server, right? and it's very nice software, but this user interface, it's kind of old, and I don't know, it's not very ergonomic. Okay, so we have these modules, right? And we'll discuss some of those. So let's start with this financial accounting module called FI. So what is financial accounting module? So this is kind of part of a ERP which handles all this financial reporting, right? So you need to create financial reports and kind of reports for external users. Okay, this information. So this module handles all those financial reported things, right? So you have general ledger, accounts receivable, accounts payables, you have tax, financial data, you have special purpose ledger, and you have this legal consolidations, right? So if you have should have studied financial statements, you have ever seen 10Ks, right, of big companies. Have you seen 10Ks before? No? Okay. So basically, if you go to, you can go to SEC website. 10K. Yeah, 10Ks, right. So if you go to SEC website, right, Edgar, they have 10Ks, which you can take a look at, right? So 10K. So what do you see if you have a big company, say like again Microsoft or Pfizer, right? Yes, but what is peculiar about the financial statements? Peculiar about the financial statements. They can get very big, right? They have a lot of numbers, right? So, but the thing about them is that usually, like say I don't know, Pfizer, right? They have I think around 20 entities. Okay, so they own a lot of companies actually. It's not just Pfizer, New York, right? They have a lot of companies. So they have to consolidate their numbers. Okay, so this is something that allows you to consolidate numbers. This legal consolidations. Actually, it's not that easy to consolidate if you think about it, right? It's not that you adopt numbers, right? And why not? So you have a company, and this company have a lot of entities, right? Why you cannot simply adopt balances? Yes. Yeah, but you should still report a consolidated numbers, where you have to combine them. So the question is why you cannot just add them up? Yeah.
Maybe commercial, maybe like in different countries.
Forget about the different countries. So you have say U.S. company, right, and you have subsidiaries, right? You have 10 subsidiaries, all operate in U.S. Okay. So and for each of those, so you have total assets, right, or whatever. So usually this is very hard to, if you report a consolidated number for the whole company, right, you cannot simply usually adopt those. Why not?
Doesn't give an accurate picture of which companies provided how much.
No, you would have okay. So you would have reports for separate entities, plus you would have a consolidated numbers. Again, that's why I ask you if you have seen 10Ks or not. So you have financial data for each separate entity, plus you have a consolidated one. And my claim here is that it's not, you can't just add up those numbers. Usually, and why not? And again, you're accountants, guys. Why not? Because they can be intercompany transactions. Okay. So you have to, for example, suppose you have two entities, right? And the same transaction can be recognized as a revenue, right? For one thing, and as expenditure for other companies, right? And you cannot simply add those up. You have to remove those intercompany transactions, okay? And again, this is something that you studied in your financial accounting. But nevertheless, so there is a way how you can consolidate statements using SAP. So again, this is very advanced piece of software. Good. The next model is controlling model, right? This module is kind of the opposite of this one. So this one dealt with all these financial reporting needs, right, for information for external users. This module deals with information which is of concern to management, to internal users, right? So when you studied managerial accounting, right, this is kind of questions or information that you would like to know, right, in that course. For example, you have those business units. So you would like to know, well, what is the cost of each business unit? What is the profit, right? What you would like to do cost analysis. You would like to do profit analysis, right? Or profitability analysis. You would like to, today actually we discussed ABC, right? Activity-based costing, right? So again, the idea here is to see, well, what are the cost drivers, right, in your business. So this module kind of answers those questions, okay? Then you have another module, sales and distributions. So this module is what we discussed actually lately, right? It's related to sales. Everything related to sales is here, okay? So quotations, sales orders, pricing, delivery, invoicing, all of this is here. So, so there is a separate module for this business cycle, okay? Then you have another module for the other part, for this expenditure part, right? Expenditure cycle, where you purchase things, right? So procurement, right? So you buy, so you buy inventory, right? Or you buy equipment. So again, things we discussed before is, for expenditure cycle is in this module, right? So it deals with this business cycle. Then you have, you have a module for yet another business cycle, which is production planning. So if you are a manufacturer, and if you are manufacturing goods, right? Well, this is a module that you definitely should use. Okay. So it's again, it's kind of what we talked today, MRP, right? Material requirements planning. So you look at the demand for your products, right? You look, well, what materials I need for this product, what are the prices, how much those materials should be in my current stock, and so on and so on, right? So demand management, capacity planning, right? Sales and operation planning. So all the things related to manufacturing are handled by this module, okay? Human resources. Okay, so human resources is what? Is when you have to deal with your employees, right? So, well, it's about, say, hiring people, right? You have to hire people. It's about your employees' development, okay? It's about, your employees' retirement and so on and so on. So all things related to employees, payments, benefits are here, okay? So there's a special, huge module for all your human resources needs, okay? So finally, very quickly, what are advantages of ERP systems? And basically the answer is those are advantages of a database, this enterprise-wide repository, right, which we discussed before, of this approach, plus some others. So some benefits are driven by database, others are by application server, right? For example, application server, so you can have this what we said closed loop verification, right? So you enter purchase order, you enter vendor number, and then you immediately can see the information about the vendor, okay? So this is one thing. Okay, then what is else? So this is online data validation, right? So data redundancy, this is what we discussed. Cross-functional integration, this is what we discussed. You can create ad hoc queries, right? You can create those cross-functional queries, right? So all of these, well, actually 1, 3, and 4, and well, more or less 5. Those advantages of database, okay, relational database. But say 2, data validation, and 6, where you have a number, a balance, total assets. You can split total assets in many things. You can look at individual transactions, okay, that constitute this balance amount. Okay, so those are all advantages which we discuss a lot in this course. Finally, what are disadvantages? Well, again, we discussed a lot of them when we talked about system development lifecycle. So it's very hard to implement such a system. It is very costly. Takes a lot of years to do it right. There'll be some kind of reluctancy, right, from your managers, from your employees. Okay, so you would have to maintain your system all the time, and we also discuss, well, so if you want to buy software, if you want to use some software, right, you really need to study it hard. So for example, you need to do some research. So we have those, you know, suppose you have an ERP provider which is kind of new, okay, or which has some financial problems. Would you use such an ERP provider? Okay, let's say so you have an ERP provider which has some financial problems. Would you buy software from this ERP provider? Why not?
If they go out of business, you're stuck with some shitty software.
Yes, if they go out of business, you are stuck. Okay, so you should look long term, right? And there should be this long term support of things. Okay, so nevertheless, this kind of ends our course. At least, you know, this part with lecturing, right? So we still have to finish stage number 3. You still have to prepare for exam. So we take final exam in this class next Tuesday, 6 p.m. Okay, so please be ready.
And when is the project due?
Yeah, project is also due Tuesday, 6 o'clock. So you can go to Blackboard to find it out. Again, you don't have to do homework for chapters 13 and 14. Okay, you don't have to do it.
Can you do it extra credit?
No, don't give extra credit. So this is just for you, you know. You know, I can either make mandatory or but yeah, I think, you know, you should really concentrate on your, but you know, it may help you actually to kind of, you know, review if you know those chapters, right? Okay guys, so thanks for taking this course. It was a pleasure here for you taking it, and hope you learned something, right? So a very hard course, you know, hard for you course, right? This is AIS course, but this is something that expands your horizon, okay? Something that gives you a different perspective of things, different perspective on accounting. So I hope at least you learned something, right? So you will know something more. And well, see you on your final exam. All right. Oh, and there is also course evaluation form, and if you have time, please fill out the survey. Thanks. Thank you.
Oh, also, it's gonna show by tomorrow. I emailed them.
Oh, so what happened? What was the problem?
Because I have 2 accounts. The first one was a preview, and then the second one, because I had to make another account, so they said it won't show back tomorrow.
Mm-hmm.
It was supposed to show back tomorrow.
Good. So I'll check and
Yeah,
not
I'll
well.
email you then.
Good. Thank you.
Sir,
Yeah,
actually,
one test.
I'm applying for period